Welcome back to Hitting the Bid, a place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. You can subscribe to my weekly newsletter at news.hittingthebid.com. Today is Thursday, September 4th. Let's get into it. So just going around the market here today. So S&P 500 up 266 on the day, about 0.4% or so to 646.40. We did hit an all-time high last Thursday at about 649 and a half. And then we had some weakness to start the week, but we've pretty much made that round trip, and we're pretty much at the open of last Thursday, maybe just $1 under. The NASDAQ up 234 on the day, also 0.4%. And the Russell up a little over 0.5%, $1.30 on the day to almost 235. The VIX down 66 cents to 1570 or so. You can see there was a little bit of spike earlier in the week, again with that down move in the S&P, but we have sold off since then. Bitcoin, it's right now at about 110,000, down almost 1,000 on the day, about 0.9%. But it hasn't kind of been bottoming here. It hasn't really sold off much more, but it still could mean that there is more weakness ahead. Bonds up about 5 ticks, pretty much consolidating here. Here is last Thursday. So we're up, actually we're down compared to last Thursday. Here's last Thursday's close, so we're slightly down. So kind of just bouncing back and forth there. A couple of currencies, we got the pound, just pretty much flat on the day. Had a big, it's September 2nd, so that's Tuesday after the holiday. So down big there, kind of making lower highs and lower lows. So it's maybe a little bit of a downtrend, but overall, it kind of looks like it's just consolidating here. And the euro at 116.54, again, kind of tightening up in this range here. Still on a little bit of a downtrend if you draw a trend line here. So we're not seeing much of an up move yet, but this kind of coiling action here, the more it coils, the bigger breakout it could potentially be. So I'll be watching this one closely to see where it goes. We got gold here, breaking out to fresh all-time highs yesterday to 36.40. These are GC gold futures. You can see it really broke out of this range here. Kind of broke this little flag formation to the upside pretty strong. Was down today at about 35.73, but now it's only down $23, about 0.6% to 36.12. So really making a pretty strong comeback here today. And silver down 60 cents on the day, another strong move here, a little bit weaker compared to gold today, down 1.4%, but another one that made a new 52-week high here yesterday at 42.29. Crude oil down about 50 cents on the day to 63.48. Was pretty strong on Monday or Tuesday. Sorry, get my days mixed up here, but sold off pretty heavily yesterday and weaker again today. And nat gas up about 5 cents to $3.11. So finally able to find some strong momentum here after hitting a low of 274 on August 25th. Now checking in on a couple of trades here. So I mentioned silver futures today, I have that trade here for SLV. That one is, let's see, sold, bought it for $1.30, rolled it. So today It's marking at 160, so about $57 on this one. It's really following that strong up move here. Here is that prior high, but a little bit of a this candle formation here, can be interpreted as a potential evening star candlestick formation with a strong green candle, kind of this doji here, indecision candle, and then a red candle that might be showing a lot of weakness. So we'll see if this is going to make a more of a down move today to really induce some selling pressure. Not liking the price action today, but I'm going to hold on to this for now since I still have 78 days. And then the trade from last week's ETHA, that one is down about $18. This one's still got 78 days, but I'm pretty bullish on Ethereum here, so I'm going to hold on to this one here for now, and we'll see if we can get some positive momentum here in the next couple of weeks. Now for today, I don't actually have a trade, and I'll switch to some graphics here that I created. So I don't have a trade today because of a pretty big macro data release, which is Friday's Non-Farm Payrolls. So that is scheduled tomorrow at 8:30 a.m. Eastern Time. So this is the jobs number that gives the change in payroll employment and the unemployment rate, and it's taken via survey from the Bureau of Labor and Statistics, typically released on the first Friday of each month, unless there's a holiday that pushes it. And during the last release, you can see, so I'll go back to the charts here. So during the last release on August 1st, so here's August 1st, you can see that day was pretty red with a gap down opening. So I'll zoom in a little bit here. So there was a gap down. So this is the July 31st close, and here's the August 1st open. So there's a pretty big gap here. The reason for that is that the numbers, the NFP report's released an hour before the cash market opens. So the cash market opens at 9:30 a.m. Eastern Time. The numbers are released at 8:30. And S&P futures did sell off on the numbers release, which is why you see this gap. Now, I don't really care too much about the estimate going into it, and I also don't care about the actual numbers itself, but what I do care about is how the market reacts to it. So, generally, I'm not trying to place bets on the way the market is going to react to a particular news release. Instead, I'll look to trade the reaction after things settle. It's just so difficult to predict how the market will react. And it's not really just a 50-50 kind of outcome here. Jobs can come in very strong, somewhat strong, in line with estimates, somewhat weak, and very weak, and really any degree in between. Moreover, there are times where good news is bad news, and there are times where bad news is bad news, and kind of here's what I mean. And before I run through this, if you have any thoughts, I'd love to hear them. Go ahead and throw them in the comments below. Now getting back to it, so if the numbers, here's the first scenario, if the numbers are strong, so that is more jobs are added than expected, it seems like it'd be good news. But that could mean with the labor market strong, consumers will still have money to spend, which means the price of goods could remain elevated. Which could push up yields because inflation is sticky, which could negatively impact risk assets like equities. Now, another scenario here. So if the number is weak, that could mean the rate cut expectations would increase. So that would mean pushing down yields, which theoretically could be a tailwind for stocks with the cost of capital lower for companies. However, a weak jobs number could mean that growth is slowing, which also could negatively impact risk assets like equities because of a potential weakening economy. Now, these are just two scenarios, one on a strong report and one on a weak report, but both are potential negative reactions for equities. And then there are alternate scenarios out there where good news is good news and bad news is good news. Really, this is why I'm not placing any trades today, and I'll just wait for tomorrow to see if there's a setup I like. But let me know in the comments what you think. I enjoy hearing others' thoughts and always happy to discuss and have a little bit of back and forth. And that's it for this week. Thanks for tuning in to Hitting the Bid. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. Don't forget to sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Till next time, trade small, trade smart, and keep hitting the bid.